Well, I did predict that by August, Obama's popularity would be waning. And here we are, end of July, and already the press is reporting that his popularity is not as high as it was. I did also predict that we would have some rallying in the stock markets, and that's what we've been having. But please, don't be fooled into thinking that everything is getting buoyant now. It worries me greatly when I hear today on the news that, oh, great news, in America, this is the first month where property prices have gone up. Wait for it, 0.5%. Frightens me because I'm nervous that people are going to get lured into another situation that will be unsustainable for them. I mean, here in New Zealand, we haven't yet had the real brunt of the housing collapse. Yes, prices have dropped considerably. I'd say on average they've probably dropped in the big cities anywhere between about 15 and up to maybe 25%. But still not huge drops. And the main people who are exiting the market are the investors, for now. But investors are still here in New Zealand getting lured back into the market. Why? Well, they see they're only getting a couple of % interest on their savings, if they're lucky, maybe 3%. And so they think, oh, I can get more having a rental property. And I'm having to hold my clients back and say, please wait. Don't go into the property market at this time, certainly not here in New Zealand. I've got a client in California. She had a property and only about a year ago it was worth $1 million. Now she's got it on for $250,000 and she still can't find a buyer. That's over 75% drop. So I'm encouraging people, please, if you can, wait. Do not go into this property market. It's far too volatile and far too difficult to make any kind of a meaningful living from it or a meaningful income from it. You're much more likely to lose or to possibly be kicking yourself and say, oh, if only I'd waited, I could have got that property for half the price. On the converse, if you owe a lot of money on your property and you can still get some of your equity out and get rid of that mortgage, I would suggest that you consider very seriously getting rid of the debt and at least being free, having some freedom. You don't want to be tied to these banks. These banks have set up their own standards. The Accounting Standards Board in America has allowed them to revalue their assets. So it means they can just effectively make up their balance sheets. Just bury the bad debts and the toxic assets. It really doesn't make sense to me, but to the average person who's maybe really struggling right now, if you are going bankrupt, let's remember the words of J.C. Penney. If you haven't been bankrupt at least 3 times in your life, you're a failure. And if you are having to accept maybe 10 cents on the dollar, rather do that because at least you've got something coming back to you. Because the tighter you hold on, the more desperate the situation becomes. And if you're not yet bankrupt and you're still able to maybe renegotiate a contract or renegotiate your mortgage, then try to do that, of course. But if you are locked in, and it may look bleak right now, but remember you do always have options. You may not like your options, but you always have some. So there you have it. Please go cautiously, go carefully. This is not an environment to be investing either in stocks or in property unless you've got a lot of extra spare money and you're not going in by the skin of your teeth and you can spare the money in case everything just goes belly up. Thank you for listening. I'll be back soon.